Yeah, we're doing this. Hey, welcome to the Closing Beat. Happy Wednesday to you. Having a good day? That's good. Glad to hear it there. We are financial advisors here at Jazz Wealth. Give us a call. You want to get your dough straight, go to jazzwealth.com. You can schedule a call. We don't do the sales pitch thing. You'll just talk to one of us. We'll tell you what's going on. If we can work with you, great. If you want to do something else, we'll point you in the right direction. But thanks for thinking of us every day. You know, that's what this is for. Hey, we're going to talk about the stock market today. We're going to go over some earnings. Of course, there's like a downpour of earnings out there. So we'll cover all of that. But if you're going to be what's the name? Center Park Stadium in Atlanta this Saturday, I will be there. Come hang out, chat with me a little bit, watch a drum corps show. I think we have extra tickets too. If you want to go, just email Haley@jazzwealth.com. Tomorrow will be Wine and Wealth. Last week, Eric did some pretty cool geeky stuff, trying to get you to think outside of the box a little bit. This week, I'm going to be covering your July financial focus. If you don't know, every month, I'm a couple weeks late on this one, but every month we say, okay, let's just focus on a couple things, right? You can't conquer the world all in one day. So let's just each month have a couple things we're going to focus on. I only have 2 for you tomorrow. Make it nice and simple. So come hang out. If you're one of our clients, it'll be in the portal. All right, let's talk about the S&P here and get right to it. Yay. How many of you wanted a pullback out there? I wish we could do a poll. That'd be pretty cool. All right. Remember yesterday we were talking about it being an inside day and we didn't know, there was nothing we could do. There was no expectation. Like, are we going higher or lower? What you wouldn't want to guess. Well, we'll come out with some earnings there, and well, that solves that. What happens here now is we now know that everybody that bought this dip is losing money. Some of them may have changed their mind and sold. Some of them may have bought more. I don't know. Well, clearly today they didn't buy more. But now we know where those people stand. We know where this uptrend stands. So if I zoom out just a little bit, we're now pulling back inside of the bigger uptrend, and people can get more excited about that. The thought there is that if earnings are going to be bad, like these Magnificent Seven aren't doing so well with earnings so far, that you could get a better pullback that would bring you back in here somewhere. That's not my belief. That's just what the technical traders look at. They say, okay, about 50%. That's my next buy zone, or their next buy zone. And so that's where you stand. So now we know what to expect. Tomorrow, I'm not saying we need to go straight down there. You know what I mean? You can have these inside days. Typically, after a big down day or a big up day, there's a day of digestion. People go out, okay, well, shoot, should I buy that? I don't know. Some people get tricked into it. Some people wait. Some people are stubborn and say, I'm only doing this down here. So if you have one of those days where you're back and forth and, you know, whatever happens, well, now you know how that all works. If we go here, over here to the bottom, I'm going to have to like do one of these guys. We now have, look, I mean, it's like a 4% pullback. So in the grand scheme of things, it's not really that impressive. But when you have a day like this, you think, oh my God, something's going on there. This must be crazy. This is the end of it. The top is in, whatever. If you look at the 5-minute chart, all day, I'm going to go back to right here. This is the futures market, so it's showing overnight as well. But if we go right there to where the market opened, look at that. Actually, I'm going to do it this way. Hang tight. Hold with me for a second. We're going to go over here and look at the SPY. That's probably what you're using and looking at. No chance of a bounce. See that? Even just a 10-minute bounce was sold back off. 10-minute bounce, sold off. 5, 10, I'll give you 15 minutes right there. Okay, great, a little bounce. All of a sudden sold back off, even down to the end of the day. So very much what you would see on TV, they would say, it was a risk-off type day thanks to Tesla and Alphabet doing their thing there. Anyways, we're 4% off of highs. That's it. You want a 10% pullback, you're going to have to wait just a little bit longer. If we go over here to the NASDAQ, that's a slightly different story, right? We were already down, and I don't know why it's not there, but we were already down to the 50-day moving average, which is very popular. People like to look at that. And now with today's move, where are we? We're almost to that halfway point. You could argue that at some point today at the low, we hit that halfway point. So it's a little different story. You've got some stocks out there that had pretty rough days, right? You could make the argument that people want to buy those. They find it now it's a fairly priced stock or it's getting into that zone. So with the NASDAQ, that's what you have there. No, I don't really have anything special to say about it. But if we go here, do the same thing. We're working on, at the lows today, about a 9% pullback off of highs. You see the difference there, right? And that's all driven by the tech stocks there. Okay. So I said it a minute ago, earnings season for the Magnificent Seven stocks, you know, kind of a rough start, right? So let's take a look at some of the things here because I got a chance to dig in. Is it really that bad? Is it good news? Is it a dip buying opportunity? Or should we just hold tight and see what's going on? All right, we're going to start with Alphabet. We won't beat it to death. You guys have been a part of you know what's going on. Decent pullback in Alphabet already. They have earnings come out, and typically the average move, well, not typically, the average move on earnings day for Alphabet over its whole life, and now I'm not using this class of stock to do it. We're using Goog, G-O-G. Typical move, 5.59%. So today was just typical, right? It's an average move. It tends to go plus or minus 5.59% over the life of its existence, right? So you saw on TV and probably reading articles or whatever, you know, YouTube revenue, oh my God, YouTube revenue was down. That was the focus there. This is their numbers, not mine. So we still have double-digit growth in advertising and in the cloud storage business, right? So the dark blue is your advertising, which includes YouTube in there, and we're, 12.2%, something like that. Cloud business, obviously still doing really, really well there. What's the trouble? Why are we down? What's going on? Well, we mentioned this before. Google and a lot of others have decided that AI is the future, and they're going to invest in it. All right, it's really expensive, right? When everybody's diving into the bathtub at the same time, the water level rises much faster than if you just get in there. I don't know why I thought of that. I would like to take that back. I'm not saying you take baths with people. Just, you know, we'll just forget that one. So anyways, here's what we've got. You can look at the amount they're spending relative to the revenues they bring in. And we're not talking small change here. This is like what they bring in like 44 billion this quarter or something stupid. So what do you notice? Well, it's basic elementary school like chart here, right? So as a percentage of their total revenue, they're spending 15.6%. This is year over year compared to what they spent year over year last quarter, and so on and so on. So if we just smooth that out and we say, well, like, okay, one quarter maybe doesn't make a season here, so let's smooth it out. That's the light blue line there. They're rolling 4-quarter spend relative to what they make, 14.4%. That might be fine, but notice how it's very rapidly increasing. So you go, oh no, Alphabet, when are you going to be done spending money here? Oh, this is tough. Well, they could have said, hey, you know, we've already met kind of everything we need to do. This is fine. But instead they said, we are going all in on AI in all aspects. We see big changes in the future here. Well, that means you're gonna have to spend more money, which means less earnings, right? Because you're trying to grow, and that might be fine for some of you, but not at that price. And that's what people decided to do today. All right, let's hit Tesla while we're here. It's kind of interesting. Tesla down 12%. So their average move is a little bit more wild, and that's just nature of Tesla and their youth, I guess you would say. 7.84% is the average move on earnings day. This is actually earnings day. Yesterday they report. We got a market day here, 12.33% to the downside there. Tesla's a little different. So over the past couple quarters, you've seen sales volumes a little bit lower, or I'm sorry, inventories higher, right? Total sales a little bit lower. Maybe not a big deal there. Revenue, total sales did beat by 13%, but cash flow. Oh my God, there's a lot of cash going out the door, and possibly even more if he gets the shareholders to allow them to invest in XAI, right? So cash from Tesla is being sucked away right now, and they want to keep expanding. Now, they said good things. The Cybertruck's going to be positive here. They're going to meet all their delivery. Well, they're trying to meet all their delivery expectations there. But with inventories rising, what are we doing? Why are we pushing so hard? Maybe let's have a little bit of more demand and less supply, right? Or maybe drives up or holds your prices steady. Anyways, with all that in mind, here's what we have. Gross margins, 14.6%. It's the opposite of the other chart, right? Gross margins going down. In fact, we're going all the way back to before COVID, the levels of margins that they just haven't had before. They're not enjoying that same level of, gross profit, really. So if you look at the price of the stock, you go, all right, well, they're not in trouble, but I don't know that I'm paying $270. And that's the adjustment that you see today. So we will see. I said the Cybertruck would be profitable by the end of the year. Well, that was pretty cool. Hey, guess the Dow. What's going on over there? Let's take a look. Old Dean was the winner.
Your winner last week was Dean K. Dean K is not a client, so we're going to get him $100. Guess the Dow is back, jazzwealth.com/guess the Dow for your chance to win $100. Kevin made an awesome leaderboard today, but it's clearly not there.
Kevin? What happened?
Well, that's on me.
All right, hey, let's do some stocks in the news. We'll get some more lessons here with you as we go. A different way of looking at earnings instead of just rattling off, they beat on earnings, blah, blah, blah. Let's teach you something, right? And then if you have questions, I'll take your questions, and then it'll probably be raining by then. And, as the story goes, that'll be what happens. All right, first up, well, there was a lot. We could spend a lot of time on this, but Capital One. Do you look at delinquencies and foreclosures and all that stuff and like play like doom and gloom kind of person? Every now and then I get an email where somebody says, oh man, mortgage applications, this or that, or newly delinquent loans, or the transition rate, which is when you transition from being on time to being delinquent to various degrees. Anyways, Capital One comes out with earnings here. Got a little problem, all right? This is for you doom and gloomers. I saw this and I'm like, I'm going to make this chart. We're going to make this happen here. Check it out. Credit quality. All right. Credit quality is basically their book of business. They've got all these, loans. They've got the credit cards out there and stuff. How good are those people at paying back their money that they borrowed? All right. So we've got non-performing loan ratio. These are loans that are not performing the way that we expected them to. That's your blue line there. That amount is now 0.63% of their total book of business. Doesn't sound like a lot. Maybe not a big deal. So we zoom out and we go, hey, when was the last time that happened? Oh boy. What's that tell you? People are using their credit card. They were using their credit cards to get through inflation and maybe still. Now they're having trouble paying for those bills. That number's going up. Now, from an investment standpoint, you're okay with that as long as they're putting aside more money for potential losses. So the light blue line is what's called a provision of loan losses. Banks do it too. They say, oh no, things aren't the quality of our borrowers. It's getting a little bit weak. We're going to put some money off to the side in case we need to charge off some of that debt. The percentage of charge-offs actually went down. So this is not like total doom and gloom, but that's what's going on there. Okay, what happens when they put more money off to the side to account for potential losses? Any guesses? Remember during the bank's earnings, we talked about net interest income. Well, now your net interest income percentage is lower. You had to push money over. You didn't get to make money on that. You pushed extra money off to the side, which potentially could be used or could be offsetting some of these defaults if that's what happens. It also takes away from earnings. So not the worst of news for them. If you look at everything else, Capital One pretty much firing on all cylinders. However, you have Capital One that said that. I believe it was Deutsche Bank overnight, which is, you can trade it here, but it's obviously not an American company. Same thing. It's, oh man, the quality of our loan book of business, hey, not looking too good there. All right. So that's that one. What else we got? Oh, you want to do a fun one? This doesn't sound like it's fun. Hang with me. Otis. They make elevators. Well, that's a big move. Down 7% today. They gave an interesting outlook into the Chinese real estate market. How could that be, right? You know how we talk about that? Like use one stock's information to get a feel for something that you can't really find news information. It's not interesting to report on. Well, they're talking about this Chinese real estate crash, right? It's all softening over there. They're cutting rates. I think they cut them 0.1% the other day. Emergency rate cut. Anyways, Otis says, yeah, we're not doing too bad, but in China now, they're not building these buildings as much. We're not going to be supplying the elevators, installing the elevators and all that. That's going to hurt our business. So we got a good glimpse into the Chinese real estate market. Sucks for them, but that's just the way that played out for them. And a fun one for me. You notice how I don't, like, it's fine. We could talk about Tesla and stuff all day, but I like looking at the odd stuff. Whenever you think you can't do something, think about Weston. Anybody know what they do? It's fascinating, really. And it's kind of dorky, I guess. This is just what I do. But so if you think like, oh my God, I want to make this part, or I want to sell tomatoes or whatever, and you think, it's never going to be big enough, they just sell they sell French fries. That's like all they do, right? That's all they've pretty much always done, sweet potatoes and things like that. They sell, when you go to like TGI Fridays or something and you get fries with it, yeah, they probably made them, sent them to the distributor, which then the restaurant bought from. Anyways, you can see it's not looking too good for them. They blamed it all on the restaurants. Not that they weren't selling enough. They said, you guys are charging too much. You've raised your costs too much. We are driving away sales, which is hurting our sales. Trickle-down effect. Pretty cool. And I just think it's fascinating. They make $1 billion a year selling French fries. You can have your crispy French fries, regular ones, the ones you get at the football stadiums, or whatever you want. High quality, low quality, it doesn't matter. So I thought that was kind of fun. All right, tomorrow, earnings-wise, we have American Airlines. Remember, American Airlines. How do you analyze that? They're going to have a lot of numbers being thrown at you. How many butts were in the seat for every mile, and how much money did they make on that butt sitting in the seat? Then you flip it the other way, and you go, how many seats were open that flew a mile where they didn't make any money? And we kind of work from there. So we'll go through that. Carrier is going to report. Honeywell, I think Keurig is in there somewhere. Raytheon and Norfolk Southern, some of the rails, Union Pacific will report as well. And of course, if you're a natural gas person, you will be taking a look at that because it is Thursday. You'll get your natural gas inventory numbers. So we'll see. Hey, if you want to learn the basics of finance, and this is all too scary for you, go over to Haley's channel. So Haley's channel is Doe Straight with an 8, and she covers really basic topics for the younger crowd and is doing really, really well. So that's that one. Let's see what questions you have. Yeah, potatoes. Lamb Weston, LW is the company or ticker symbol. Well, you got 48 out of 50. Oh, from your shooting yesterday? Man, don't mess with you, huh? That's pretty good. Otis had a turnover of experience and technicians. The support has reduced quality a lot. I think that was about 6 months ago or so. Can't remember reading about that. Less elevators, going into less buildings. And China, remember, they were going nuts over there. They were building like crazy. Yep. Raytheon, to give you insight into the airlines. Also, General Electric yesterday did the same. Would it be better to compare Tesla's gross margin percentage to, oh, it's like blocked out, to competition? Well, you could use Ford. I haven't had a chance to look at it yet. Ford's a little different story because remember, they were like, hey, all EVs. Wait a minute, that's expensive. And they backed down on that one. Gross margins are important in the auto industry, especially if you're going to keep making more cars and your inventories are going up. Like, what are you going to do? When the market pulls back heading up to the election, is the Dow and S&P that could be a big percentage? I forgot it today. We are going to cover it on Wine and Wealth for sure. I 100%. I already have the data. I have it on my laptop right here. So everything. Like, I'll probably even have to simplify it. But we'll go through all of that, and then I'll have everything kind of ready so we can do it here. Opinion on CrowdStrike. I wouldn't want to work there. I wouldn't want to be leading the company right now. Let's say that. A lot of price targets adjusted well above current price seems to be overdone. Yeah, in the very short term, even Eric was excited. Eric sold some puts or something somewhere just because he loves that really extended moves, usually to the upside, but this time he went to the downside. So for his sake, I hope that this is roughly the area because we know where he sold the puts at. You don't like to see today. Right? Even though it was a down day in the market, it kind of loses a point for that. But you don't like to see a day where, oh my God, we're so oversold. There was an attempt at a bounce that immediately was pushed back down. There are still a lot of sellers there. I wouldn't be too excited about it myself unless I had some far out of the money puts. And even then, you're moving double digits in dollars a day. It's a tough one. How do insurance companies, i.e. Progressive, do when rates fall? Specifically, I don't have that. I can find that. That's an easy answer or easy thing to look up for us. Progressive in particular. We could do that. Yeah, I was trying to think of how we'd find it, but I don't know that off the top of my head. Yeah. Best performing stock for you today was AT&T, was it? There were a handful of stocks that had a good day, and it was all earnings related. So I think it was Thermo Fisher was the other one. AT&T up 5%. Thermo Fisher was the other one at about 4%. So any stock that you really looked at besides maybe in the healthcare sector that had a good day today, you take a look and go, oh, it's probably earnings there. More subs, man. More subs for AT&T. That's what they want to, that's what they like. Oh, do we have a poll going on? 71% of you rooting for a stock market pullback there. 28. Did you get to choose yes or no?
Yeah.
You try unsure next time.
Oh.
You know how they do with the political stuff?
I like that.
Who's unsure? I don't know what that is, but yeah, there you go. End phase as well. Yeah. And then I guess Solar Edge right in there. Playing along with the no, it finished down. Sorry. So only end phase. That was earnings for them. And Solar Edge was playing along there for a minute. But that was the end of it. All right, I'm going to wrap it up there. Remember, if you want to chat with us and maybe see if we're a good fit for you, be sure to check out jazzwealth.com. We'll be back tomorrow. Do this all over again. We'll see.